Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. Registration is now open for our next event, the Planet MicroCap Showcase, taking place in Las Vegas at the Horseshoe Hotel and Casino, formerly Bally's, on April 25 through 27, 2023. We just announced our initial presenting companies, and even since that initial list, we've added some more names, and I am beyond thrilled with the lineup that we have that we've put out there so far. So definitely go and check that out on our website at www.planetmicrocapshowcase.com. We also announced our initial sponsors and speakers for the event. We did an episode last week, 2 weeks ago, with Andrew Walker talking about how he's going to be moderating 3 pitches for his podcast, and also on our headliner Maj Soueidan from GeoInvesting will be headlining the top tier track, which you're going to hear a little bit more about today. So for more information to register and attend, please visit www.planetmicrocapshowcase.com. See you in Vegas. Like I said, my guest on the show today is Maj Soueidan, founder and CEO of GeoInvesting.com. In my opinion, Maj is a legend in microcap investing, period. My nearly 10 plus years of getting to know Maj, his investing style, and how he evaluates companies, he's on the Mount Rushmore of microcap investors of the last 20 plus years. This is the reason I invite Maj to be a guest on my show, as well as headline any conference that we do. When he speaks, I listen. And if you have a chance to meet him and chat with him, you should. Maj will be hosting a top tier track on day 2 of our upcoming conference, the Planet MicroCap Showcase, like I said, happening on April 25 through 27, 2023. This has been an idea that we've chatted about for years, and finally making it happen. Basically, microcap management teams that fit Maj's top tier criteria, which we describe in today's pod, will be giving 10 to 15 minute overviews of their businesses, followed by Q&A with Maj and the audience. I'm really excited about this part of our agenda and wanted to dedicate an episode of the podcast to, shamelessly plug our upcoming event in Vegas. Not going to deny that, but also discuss what the idea is, Maj's top tier criteria, why this criteria is important to digest with the current state of the markets, and discuss a few names that will be participating. Maj and I always have a fun, lively conversation, and this should serve as a fun preview of what you can expect in Las Vegas if you choose to join us. Thank you again for tuning in to the Planet MicroCap podcast. Please enjoy my conversation with Maj Soueidan. Maj, good to see you, my friend. How you doing, man?
I'm good, Bobby. Thanks for having me today.
Absolutely, dude. It's been a minute since we had you on, and we actually have a lot to discuss, dude. Not just having to do with our conference, but I mean, we're recording this on Friday, March 10th. Silicon Valley Bank news. I mean, this is an interesting day. Yeah, right. So but first things first, we just announced our for the Planet MicroCap Showcase Vegas, happening April 25 through 27 at the Horseshoe Hotel and Casino. It's formerly Bally's. we just announced in the last couple of weeks here initial speakers and sponsors, and then just this week initial companies. And I wanted to kind of give folks a better understanding of what you're going to be speaking about and doing at the conference. Just kind of general overview. Maj is going to be doing moderated presentations on this top tier track. Okay, that's going to be happening on Wednesday, April 26th. Where companies are going to be doing like 10, 15 minutes of presentation and then Q&A both with Maj and the audience. And so I wanted to kind of dig in a little bit. So Maj, this was something that we always kind of talked about, and I'm stoked that we were able to kind of incorporate this idea into our Vegas event. So tell us what your thought process was when we were talking about it, and then maybe some of your criteria for the selection of the companies that we're having on this top tier track.
Yeah, thanks, Bobby. Hello, everybody. Thanks for watching today. So before I get into, I think I don't know what year it was, Bobby, that we decided to start being a little more interactive with management teams in the at your conference, and I think we experimented with it several years ago, and I think I asked you if I could just like interview some management on a panel kind of thing, maybe had 2 or 3 on one panel. At that time, it wasn't really a top tier track. It was just I just figured I want to learn more about these companies, and at that time, I forgot the symbols, but I wasn't necessarily favorite stocks, but I wanted to kind of go through the interview process because they were coming to your conference and I wanted to figure out, let's try it out. And then I guess it evolved into where eventually we said, well, why don't I try and maybe talk about some pitches that stocks I like, maybe my top 4 or 5 holdings, right? And I think we tried that. And I think the first time we did that, it was Rand Worldwide, RWWI, and OTC.
So Maj, I think the first time we did the Rand Worldwide, I think that was on the Avoiding the Crowd podcast. I think that was the first time we did some of the pitches, and then I think for the conference, that was when you did the moderated Q&A last year with InTouch, and that was awesome. I love that. I think that was the most well attended presentation in the whole event. Everybody had a good time, like not just hearing from the company itself, but there's a bit of interaction, with somebody like you that knows the story a bit better, and can ask some of the more targeted questions that folks want to hear.
Right. Well, I will. Yeah. So we might have done RWWI on a case study, I think, on Avoid the Crowd. But before that, I definitely pitched it as one of the stocks that year. It was, I don't know if I think it did 4 stocks. It was
RW. Right. That's right. Yeah, you did the stock pitch. That's right. My bad. You're right.
I think it was RWI, right? That was one of RWWI, Rand Worldwide. I think was Altigen on there or not? Was ATGN on that one?
I can't remember off the top of my head.
Well, DHX was a staffing company, right? And I just don't. It slips my mind. Maybe we can find it later or something.
Yeah.
But that was going to drive me crazy now for the rest of the podcast. I'm going to be thinking about it. But maybe it was only 3. I can't remember because maybe I didn't have time to do 4. RW did pretty good actually. That was good. DHX did good eventually, and Altigen's kind of did good then fell apart. We'll be talking about that today a little bit. Yeah, but then we, I know you and I have been talking about that for a long time, and then we had InTouch. I just at your Vegas conference, and I think it was the in-person conference last year. Cameron Watt, CEO, we had like a little fireside chat there. So I guess we're expanding on this a little bit and trying to maybe make it more of a formal kind of track at your conference, to kind of maybe help. The way I look at it is help some of the companies that I might think are more are further along in their revenue and they're profitable, have profitable operations, meet some tier 1 criteria that we set at Geo Investing, to maybe get a little bit of extra kind of extra look, and maybe help attendees at least maybe see these companies, because it's hard when you go to these conferences to know like which ones you should look at and stuff. And I like to do my best to try and at least look at the ones that I'm not saying they're all great picks at all, but that that have substantial revenue, they're at profitability or near profitability, have clean balance sheets, clean capital structure. So and I don't want you to make it look like all we do at Geo is look for these top tier companies. It's basically, of course, if you can find we have a 10-point criteria, anywhere from management to insider ownership to share structure, profitability, balance sheet, kind of, income, anything you would think would be top tier kind of criteria. And obviously, if a company meets all of them, the criteria, and they're cheap, that's great to find that. But a lot of times our opportunities we find are like when they're missing one or two of them, or just getting into some of them, like the profitability, or if you're looking at a turnaround, where, okay, we're not saying we're looking for always the best quality companies at the moment. We were looking, because if you want to fool the market and get the best, best opportunity, sometimes you got to buy them before they're great quality in terms of on paper, at least. So we're still trying to look at, to find those that are maybe right around it. But it's great when you find one that's cheap and has all the criteria. It's hard to find, in nanocap land, you're going to find hair all the time, often on these companies. So you can't avoid that all the time. So that's basically the impetus of this. I think, what's in these stocks, most of my probably own shares in them that were going to be there. I guess you could call it talking the book track too, I guess, right? So that'd be actually a good idea. Talking my book, right?
That's what we should call it. It's called talking the book.
Yeah,
talking the newsletter.
It's full transparency, and it doesn't mean they're all great buys now, or it might be, but they might, So this is really a situation where at least I did my best to go through the list of companies that were coming. That's my momentum screener. Sorry. I'm surprised it went off today in a down day. Must have been a Sol stock hitting a high.
Yeah, right.
What's going on there?
And really at the end of the day, and this is why, look, I've known you for, like 10 years now, 8 years, something like that, and like one thing I've always respected is your process in going in and looking at, because one reason we called your podcast Avoiding the Crowd is because you really are finding these companies almost all the time way before everybody else. Sometimes some of these stocks are thinly traded, some of them are just like completely off the radar, and yet they're being overlooked for whatever reason, despite maybe having some top tier qualities to them. And secondly, there's this idea of curation. You come to our events and it's sometimes hard to be like, all right, where should I go? And, what room should I go and listen to this presentation, whatnot. And part of the reason I loved what we did last year is that we gave some folks like a little bit of something different. And that's why I wanted to compound on that this year with doing a bit more of these types of, moderated Q&As, just to give folks a better understanding. Like, okay, like, I've heard Maj on Planet MicroCap every once in a while. Hey, I might be a subscriber to his newsletter. Let me hear maybe some of these ideas that he's been talking about, or maybe he's a shareholder in, and learn a bit more about why maybe I should, learn about this or dive a bit deeper.
Right.
Simply put.
Yeah, and I will tell you, like, it's just, again, it's not a situation where I don't want this to people think we're bringing the best companies. I think, I don't want to be sitting here. We're highlighting what we've got as top picks. We're just, again, this is companies that have revenue, substantial revenue, maybe, and are profitable or getting there. But I think that especially like with Geo, we've evolved over time at Geo, and obviously we're always looking for great companies. But around that, you can have different periods of time where sometimes more speculative companies might work and might be fun buying them. And as in the environment that we've been heading to here in the last couple of years, we've decided to really go away from the speculative, less speculative, and more of these really solid, GARP or growth plus value type of plays that are substantial companies. That you can value on earnings, not just revenue or their prospects.
And it might seem obvious to most, like why, but for those that may not have made that connection, why this criteria right now, especially with where we're at in 2023 on March 10th, 2023, with all the news and everything.
Well, I guess the first reason is because buying whatever you want doesn't work anymore. Buying sexy or buying, Peter Lynch, I bought this at the store, I'm going to go buy the stock now. That's not working. Like, it doesn't work anymore. And I think a lot of people.
Wait, you're telling me picking the what is it, the Scrabble tiles out of the thing, and then that's the stock you pick? That's not going to work anymore?
Not anymore.
Damn.
The monkey throwing dart thing might still work, though. He's kicking ass probably. But it's. not look. I gotta tell you though. I mean, it was. I mean, I got caught up in this euphoria in the last 15 years, and only because I found it very hard to have a broad portfolio of these really deep value or GARP kind of stocks. They weren't really working well in terms of getting the valuations that we wanted to get to a fair value. Nobody wanted them. They were all buying Teslas and biotechs, pump and dumps, and it didn't matter. I mean, rates were low, liquidity was easy, money was there, and companies could raise whatever money they wanted to raise and tell great, sexy stories. And every investor's bought the stories. And those, $1 billion markets, and we're gonna take over the world, and we're gonna get, we have 0% market share now, but if we just go 1% $1 billion market, we're gonna be this big. So that was kind of going on for a long time. And the more conservative companies that were just traditional growth, the value stocks didn't really appeal. And there's only so much money to go around, and you have crypto going around, taking money away from the nano-cap space, and very speculative. So, and but now that's everything has changed, right? And the money isn't easy, the rates are high, and the market is going to start punishing these stocks that are not going to be able to raise money or make money to function. So the money is going to eventually, is actually going to these traditional kind of GARP kind of companies, especially in the smaller cap arena. We're seeing it, we're tracking it a lot, and it might not be as consistent flow as we want, but you're starting to see this trend there. And it feels good. Like my first 20 years of investing was all about that, just buying these GARPish type stocks, and it was worked like a charm. The last 15 years, where it wasn't working as well on a broad basis, I think was not the norm. And I can't believe it took this long to swing back to the pendulum to come back to norm, right? But I think that's where we're in. I think the next bull market is going to be this wonderful kind of bull market in these smaller cap, nano cap kind of value type names. I don't know if it'll be as robust. So what we saw in 2020, when we saw this great money coming in, and everything was going up, even, so it was great for my, my value stocks. It would go up, but imagine that for 20 years. I mean, that's how what it was like when people were buying those kind of stocks on a constant basis. That's what we all craved. I don't know if we're going to get back to that type, because there's so many different environment now. Not just for the market. It's harder to buy OTC stocks. Brokerage firms don't like to do it as much. So we're not going to, I think, get into that kind of frenzy like I did in our first 20 years. But there's going to be a lot of opportunity and a lot of money still coming into those kind of companies. And what's funny is I launched a new product recently, and I haven't really marketed it yet. It's called the Active Portfolio, under one of my companies called MS MicroCaps. And it's three things. It's basically my cliff notes. So they're really short notes. And this basically takes me back to how I used to do it when I was a kid. I would basically have like a one day a week on a Sunday. I'd have like a skull session. I had a friend at that time. We were doing it together. We would go in the office, spend 5, 6, 7 hours on a Sunday, and just go through all these, all this information and research, and write down cliff notes. And then, we had a binder and a spread, and we draw lines and have columns and notes. And it took me back. And I said, you know what? Why don't I go back to that and see how that looks? Geo is very, we do a lot of work on Geo, real long reports. We have the fireside chats. Every day there's an email going out to members, and we have a weekly email. But I wanted to dial back a little bit and say, let me just go back to this really quick cliff notes, like going into press releases and dissecting things really quick, right? And using this top tier criteria that we use of 10 points to really kind of find these companies. And I'm trying to find these tier 1 companies that are some type of inflection of growth. So I am trying to find timely companies in the meat of a growth cycle that are in that tier 1 mix. Or maybe going through restructurings to get there. We're doing a lot of Chapter 11 exits, for example. So, it's that. It's also an active portfolio of where we have a mock portfolio of $100,000, and up to anywhere from like 5 to 15 stocks are in there, kind of going in and out. And we launched that about a year ago. And then I'm building some tools around this thing, which we're about to launch soon. But the cool thing about this whole thing was the cliff notes. We have about 55 cliff notes on there now. And what it basically is cliff notes, the price we found that we publish a cliff note, the tasks that we need to basically perform to verify some of the things we found, and then some management commentary from either press releases or conference call transcripts and links to everything. So it's very quick, and the returns were pretty amazing. So we launched it about a little over a year ago. And if you're just thinking a passive approach, like buying every stock equally weighted in the thing, the higher return was, I think, like almost 40%. And then the current return is about, I think, 17% now because everything's come down, but that's still pretty good when you think about that's from doing nothing. That's not even like taking what we think are the best stocks out of there, right? And I thought that was, and they're all nano caps and micro caps. Really, I would think they're probably all nano caps. But you'd be amazed at what these, and as part of this whole tier one structure that we look at, right? We've combined it with this, what we call big cap micro caps. And these are companies that are on their way maybe to big cap revenue, trading at nano cap kind of valuations, right? So, you can find companies with trading 50 million, 100 million, well over, maybe even half a billion revenue, trading as nano caps. And we think that's a lot where the money is going to go to too, because I think investors are going to want to be a more quality type of proven companies a little bit. So that's where all of that really centers around. And a lot of that's coming from Canada too. We're finding some great Canada. I think I gave you a Canada symbol to take a look at for your conference.
Yeah. Well, no, I saw you just put out that newsletter. I was like, wow, it's about time Maj put this out, because every time, like when we talk about Canadian stocks, like, it's a US symbol. And then, but that was super interesting to see you publicly put that out there. That was good.
Yeah. I got to tell you, they've been some of the best performing stocks for us. Paul Andrula is all over that, right?
Yeah.
And small cap discoveries, but
one of the
it was Reitman's was a Chapter 11 exit. There was Ham, which is a huge company, biggest retailer in, I think
that HPS-A?
There's a Ham and Power, which is HMDPF, I think. And that went from like $13, $25 in a matter of, not too long. And these are legitimate companies, with hundreds of millions in revenue potentially.
Shareholder?
And I am a shareholder in Hammond.
Okay.
Very small and not big enough, unfortunately, because all my small holders are going up, and my big ones are all going down. So I was telling you earlier, I got stuck in this kind of transition. So not to get off topic a little bit, but I had a good mix of growth and value. Garpy talks about some speculative stuff. And some of the speculative stuff maybe they were growing in revenue and had great growth stories, but maybe they weren't there in earnings yet. And or maybe if they were earnings, maybe they were selling high PEs. And I got stuck in some of those. So now I'm in this kind of battle zone where I've held on to a lot of these companies, and I'm at this decision: do I just get rid of those and move on to where? Because when I saw this cliff note kind of returns, I'm sitting here waiting for these other ones to come back, because emotionally I don't want to lose. Right? You don't want to admit you're lost. And a lot of them are still up from where I bought them, but they're still well down from their highs. And you battle, I'm just going back into my career, thinking when I was younger, I didn't care. I would just sell it, move on, and it felt so good, right? So I got to I'm rediscovering that lesson in life that helped me be successful earlier when I was investing. I just didn't care, So, but it's hard to see a stock go from like 20 cents to $6. Now it's back to, if it's back to 70, 80 cents, it's still tough psychologically to take. Right. And then you go into that whole mindset. If you sell that and you buy another one and it goes down, what happens then? And you get this whole mess. But this tier one track that we're looking at here is kind of a combination of these 10 criteria we're looking at, either the companies that meet them or getting closer to meeting them, combined with this big cap micro theme where they have substantial revenue. And when I say substantial, I used to kind of define the big cap micro theme as those stocks that were maybe over 500 million, but I thought that was too restrictive. So we brought it down like to 50 million or so, just to be at least at that level. In terms of profitability, that's a tough criteria. So I always like them to be profitable, but sometimes the best opportunities are right before they're profitable. Especially right now in this market, because people want profitability, they might be ignoring these companies. So if we can figure out they're going to become profitable, we're going to have a few of those companies that are at this conference. They're not quite there yet, but they're real close to it, and we need to figure out through these interviews if they can get there.
By the way, going back to the analogy that we always use when it comes to microcaps, how like all of them have hair. I maybe this is a bad joke, but I'm thinking to myself, this might be the one area where like being a little bald is actually a good thing. Just less hair. That was terrible. I might. Well, that was absolutely terrible. I should have saved that for when like we had a couple drinks. Then you would think that's hilarious. But let's transition into some of the names that are going to be on this top tier track. All right, so I think you already mentioned Altigen, ATGN. So they're coming back. And then we also, I believe, have confirmed Heritage Global, LFTD Partners, as well as InTouch Insight is going to be coming back and being on there as well. So, speaking to just these four specifically, what about these four that you thought might make a lot of sense to have on here? And even before we get into that, just disclose whether you're currently a shareholder in any one of these four.
Yeah, I'm a shareholder in all four of those: Altigen, ATGN, HGBL, Heritage Global, Lifted, LIFD, and InTouch, INX.V. But I own the OTC symbol INXSF. I think I've been a shareholder in ATGN since 2000, February of 14, maybe.
Wow.
INX.V maybe October, November of 19, right before COVID, of course. And we'll get to that in a second. Why it's critical. Lifted is a new one for me, and then HGBL is a relatively new one. I would say last maybe 2 years now. I've had a little bit of it. Can't remember. But and so yeah, and what's interesting was, and I thought that it's a broad mix here of stocks, right? And there's going to be some hair on some of them, and maybe not on others. But we'll talk about those. But when you look at ATGN, and that's when I think I pitched at one of your conferences too. I think I bought it originally maybe around 25 cents or so. This is one of those situations. I went the round trip, 25 cents. And we it's been on Geo since then also as in one of our model portfolios. I think it goes to almost $3, and now we're back to 51 cents. And even though they're growing some revenue right now, and we'll get into at the conference what's going on, why I think it fell, but why I still think it's really an interesting opportunity right now to take a look at the company. You have buyer, you have a situation where they were maybe a little late, or they're still on getting their new product rollout, their software product. They're a cloud communication software provider where they have a new platform they've been trying to get out. And there's been delays getting it out, and that combined with being right around profitability and not quite there yet. And sometimes they are, sometimes they're not. It wasn't the greatest stock for this environment, maybe. But so we're just going to try and find out from Jerry, Fleming, the CEO, how close they are to breaking out to growth driven by this new platform. And I don't know when at this point. I'm done saying it's going to happen next quarter. We still don't know. What I think I do know, or we do know, is that when it does happen, it could be big, because of their relationship with Fiserv and their focus also on Microsoft Teams. And we still think they can sell the company at the worst case scenario at a much higher price than they're at now at the worst case. So we'll learn more about that at the conference. HGBL, Heritage Global, is an interesting one. It's not a big position of mine, not yet, but this company does asset liquidation type of a business, and they also have a platform for companies that have lenders that want to basically lay off maybe some bad debt or risky debt on a platform. So consumer credit kind of charge off type of platform where it's a marketplace there, I guess, for people who want to buy that stuff. So you can imagine the reason I thought this would be interesting right now is because if we're going into a tougher economy, both those pieces of business should do well. You should have more liquidations, more asset liquidation opportunities, as either firms maybe go into Chapter 11 or companies want to downsize and sell some of their divisions. So HGBL can go in there and buy these and auction them off, and sell them. And then, of course, as people start getting closer to defaulting on their debts and stuff, or maybe they become riskier type of borrowers. the lenders might want to offload some of that debt on the platform. So that's really, so we know we created at Geo recently two model portfolios, one called the recession proof portfolio and one called the recession resistant portfolio. The recession proof are those companies who think that can withstand and maybe even do better during a recession. The resistant one are those that maybe can withstand the recession. Maybe they don't grow, but they can survive through it pretty nicely. And I think we put HGBL on the recession proof one recently. So I thought it'd be a pretty cool company to bring because it kind of ties into this, they might even be stronger, get stronger during an economy. They had a bad economy. They had some earnings today, which really
yesterday.
Good.
Yeah, I think they came out yesterday.
Was it yesterday after the close? Yeah, after the close. The conference call was lights out. A lot of information arbitrage in the conference call. Stock's barely up today because of the market sucks, but we think that should go higher in the short term at least. The tough thing with that one is how do you value it, because they have this situation where, the platform. I like the platform. It's probably a lot more sexier to value, and it's probably more constant and predictable revenue stream and earning stream. The asset liquidation business is a little tougher. It can be lumpy. And how do you value that type of business? And so that's where the tricky part of this goes. We'll talk about that at the conference too. Like, should this get a valuation based on its software platform? Or I'm sorry, its marketplace platform. And what kind of valuation should we put in the asset liquidation platform, right? And I think if we can say that this environment they're going to be in a great environment for the next 3-4 years, maybe you could place high valuations in both parts of the business if they're both going to be continually doing well and growing and not be as lumpy as you might expect in the asset liquidation business. And then we got Lifted, which is LIFD. This, if you want hair, so I swear I would never buy another marijuana stock or a cannabis related company.
Cannabis adjacent.
Yes. Hemp-derived products, psychedelics. I do think they want to get what they want to do, expand outside that. And I'm still digging my feet into this company, trying to figure it out. The CEO has some experience with success stories with our companies in the past. It's got a really low PE of maybe 5 or 6 or so, because you can imagine it's on the OTC, by the way. As is APGN, HTBL, I think is listed on the NASDAQ. So you have a situation there where
that's
who's going to, and it's going to get a low PE because of the environment it's in. And there was a time that you would have got a high valuation being in this industry, but it's tougher right now. But their strength is they have a really strong distribution network, so if they want to create new brands or acquire brands, they can shove them right in there. I think they're on track to do maybe 80-90 million in revenue. Well, they were before they had a issue in the Q3 that's resolved. They had a product recall and some supply chain issues. But I think on a normal kind of run rate, they're probably going to be over 100 million in revenue. Yeah, so we want to dig into that and trying to figure out with the kind of optics. By the way, a great capital structure, not a lot of outstanding shares, clean balance sheet, which is unusual in this space, right?
100 million run rate on hemp-derived consumables and psychoactive consumables.
Their market cap. Let me see if I can pull it up here.
Disclosure: I'm not a show.
They have 53 million market cap right now, and it's not a. By the way, it's also not a big position for me yet. It's very illiquid, but we'll see how things go. I know they want to make some acquisitions, so we're going to learn about that and trying to figure out do we think that this will this PE expand? Will the value, or we'll just stick it at 5-6 PE because of their end? But even if it stays at a 5 PE and they double triple earnings, the stock should still follow suit. But what I'm wondering is if the market does get favorable again for that sector, or can it trade away from that sector kind of stigma, and can we see a re-rate in the P to a 15 or 20 PE? That'd be interesting. And hopefully during our interview with them or our presentation with them, we'll try and dig into that a little bit. And then finally, there's Insight with Cameron Watt, CEO there, and I've known him, talked to him a lot of fireside chats. Did it with you, presentation with you at your event. You've done some interviews with him, Bobby. And this is a customer experience company. They They send people on the ground, to mystery shoppers, to retail operations. They do audits on company locations, make sure inventory is correct, pricing is correct, branding is right. The salespeople are doing what they got to do, making sure regulations are being followed, all these things. So that's the kind of on the ground, the labor intensive part of the business. But they've combined it with a software piece of the business, which the CEO kind of helped developed and made it as a core objective of the company to have that when he came on board several years ago. We want to basically, and the stock's been growing nicely. They're doing about 4.5, maybe million in revenue a quarter, maybe close to 5 in some quarters. Actually, I think they're closer to 5 now. They just turned profitable they were sitting at break even for a while when I found them in 19, and the last 2 quarters have been profitable. But the stock is getting no respect. And look, the part of it might be because a lot of their clientele are in the retail side, big box retail and hospitality. And if you're going into a recession, are they going to cut back on those expenses? So that's where I think part of our, there's some info arb in their CEDAR, I don't know how you pronounce it even. CEDAR filings, SEC. All the Canadians out there laughing at you.
They say
that stupid SEC guy. What's he know? don't look at our filings, but there's some info arb in there where he talks about.
I'm gonna ask Paul. I'll be like, Paul, Maj, this dumbass said CEDAR.
It's like, but the little capture bullshit.
Classic American man.
But there's some verbiage in the filing where they talk about them not seeing that as a problem right now, and then they were talking about it in previous filings, like they were just watching it closely, but they weren't seeing it as a headwind. But who knows? I mean, things can change fast. And what we want to hear it from Cameron. We want to talk to him about his feeling about a recession, and there's actually arguments you can make that will be good for the company in a recession, because company they need to know their customers even more during a recession and make sure they're running a tighter ship. But there's also arguments that some of these companies might cut back on those expenses. Who knows? But we like to maybe dig in that a little bit. But it's selling at I think an EV to sales of maybe 0.6 or so point, and just as where there's a big software presence in the company. So if as a software piece of the business grows to become bigger and bigger, which has the higher gross margin and will drive profitability, we think that over time, valuation can expand. But it's a little maybe difficult for investors to. Again, you got 2 pieces of the company. You got the sexy business, which is the software, and then you got the less sexy, which is the the labor kind of intensive business.
Right. So, all right. So that was a good flavor of some 4 names that are going to be on this top tier track during the event. There's a few more names that we're going to be announcing as we get closer, but we thought, for our intents and purposes here today, I think that's a nice overview of a few of the names and kind of a flavor of what to expect as an attendee, which, quick break. You should go register. It's complimentary to attend as an investor. And one
of those 3 companies is also on our recession proof or resistant portfolio. It's also it should benefit from a recession.
Yeah. Which one? HGBL, I would assume.
Well, HGBL is one of the ones we haven't mentioned yet, which were, I guess, the teaser is also on that portfolio also.
Cool. By the way,
and it's software, which is nice.
Nice. By the way, I want to make sure so that, and this too, but all subscribers to geoinvesting.com, it's complimentary to attend Planet MicroCap Showcase. If you'd like to make the trip out there, we'd love to have you there and welcome you. We know the Custards will be there for sure. They're always there. We love them. So shout out to the Custards. Hopefully they see this. But quick transition. I want to close this out here today because we've been talking to already kind of dig deeper in microcaps and everything like that. But I wanted to kind of in microcaps in general right now. We're kind of towards the tail end of reporting full year 2022, Q4 2022 earnings. What's been your general take on microcap performance overall, based on last year, full year earnings, Q4, and kind of some of the rumblings that you're already hearing about Q1?
Yeah, man, I know. I just never been my forte predicting these kind of things. I mean,
it's not prediction
take it as it goes, but I just yeah, it's frustrating. I mean, you have some of these stocks that go up really nicely, and then you're still seeing this volatile market where you see stocks losing their gains really quick. So it's challenging to hold on to some of these names. You think you're safe, and all of a sudden they're down 30% for no reason after being up 50% over maybe 6 months. So that's the environment you're still seeing. And it's not across the board, but if you have a broad portfolio, you're going to have some of that stuff happen. And I still think that, that transition we talked about to kind of this traditional kind of value or GARP kind of investing is going on right now. I do think that we still have to see a lot of these stocks from 2020 and 21 that are still sitting here at valuations that don't deserve to be. But given that the amount of money they're losing, that has to go away. There's still so many of those companies, well over 1,000. I think that I did a screen where I think it was maybe 1,200 companies or 1,300 companies trading over $1, losing $20 million a quarter. And some of them are trading, much higher prices with crazy market caps. And I'm shorting some of them. I don't really talk about them, anymore, Geo, but it's working out. But I think until that kind of plays out a little more, we're still in this kind of tough environment where there's going to be a lot of people still losing a lot of money in these companies. And until that cycles out, we still might have this volatility. And I think like if the average of companies selling over $1, losing 20 million a quarter is at a pretty on the higher end of history. And so I want to see that come down, but there's a lot of opportunities to short those stocks too. I'm not going to mention them, but I think there's still people who are believing in these companies that they're all going to go to zero. And I think I'm wondering how that's going to play out and from a psychology point of view, But overall, I just think stock picking still works more now than ever. Hopefully I think that portfolio from MS MicroCaps from the Cliff Notes is proving that if you can find great companies with traditional type of research and traditional value, just have sales, growing earnings, going through some kind of change, inflection points, and it works. And that's always going to work, I think. I think that maybe an extra focus on trying to find stocks in these recession-proof or resistant type of areas is pretty interesting. But it's hard in a down tape to have a broad portfolio do fantastic all the time, right? But
100%.
Yeah, but I'm still optimistic long term, and I think that I don't day-to-day volatility. What are you gonna do about it, right?
Yeah, I hear that.
Yeah.
All right, dude. I think we're pretty much there, man. I mean, where can folks go and find more information on geoinvesting.com and follow you on social media?
Yeah, so you can come to geoinvesting.com and fill out one of our opt-in forms. You can email us directly at the support@geoinvesting.com. You can email me directly at maj@geoinvesting.com. We have the Twitter is @geoinvesting, and my personal Twitter is @maj geoinvesting. It's MAJ geoinvesting. And we're always looking for new stock pickers and those that value picking stocks on traditional old school value earnings, sales and earnings, and PE ratios, not just the EBITDA number or a sexy story.
That's right. Well, look, and everyone listening in, come join us in Vegas. We, listen, down markets, up markets, and when you come to Vegas, it's a great opportunity to really, especially in microcaps, you need to meet management. And this is a great opportunity to finally hear what they have to say, how they present, and maybe they can answer a few questions that you might have. So be sure to join us. Go to planetmicrocapshowcase.com to register. Like I said, all Geo Investing members, it's complimentary to attend. Come see Maj do his thing. He really does a great job in doing these fireside chats. I watch them all. He really knows the stories inside and out and asks the questions that you really should be asking and getting the information that you want to know. So, I've always looked at him as a mentor and, hearing how he asks these questions. And, I sometimes use some of those questions when I do interviews with companies. So don't miss out on that. I know he's giving so much shit. But seriously, everyone come check out, come see Maj do his thing. speak with management team a whole bit. We'd love to see you and host you. So with that, Maj, thanks again for kindly volunteering to do the top tier track in Vegas, and we look forward to seeing you all there. Thank you.
Thanks, Robert.
And for full disclosure, Maj Soueidan is still a shareholder of RWWI and is not a shareholder of DHX. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.